Good morning, everyone. Welcome to Admiral Markets live trading room. We're going to start and take a look at the Forex market in just a minute. But before we do that, as always, we're going to take a look at this disclaimer quickly, explaining that trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. So we do thank you for your attention on that. And we're going to take a look at this live trading room. We have some interesting stuff going on. We'll be taking a look at the pound odd reversal setup. We're going to take a look at the euro pound as well for what I think could be upside continuation, dollar yen finishing of the triangle perhaps, and maybe an odd dollar breakout trade. So those are just four ideas that I think will take some time to explain. So that should be plenty of stuff to look at within our session. So that's this agenda for today. In general, though, what we always are doing is establishing a trend bias. What kind of trader you are, it doesn't really matter. You're always trying to establish a trend bias, looking for opportunity, checking filters, seeing what the trigger is, and then choosing an entry methodology. All right. You'll be seeing Trading My Own Money, and we'll be looking at me doing chart analysis. And when doing that prep work, we will also probably bump into a trade or two. Alrighty, some trade examples there at the bottom. And with that said, I think Michal is here today as well. Good morning, Michal.
Yes, thank you very much for a lovely introduction, Chris. Definitely am here today. Thank you very much for introducing me, and thank you to all of you who decided to participate in this webinar. Now, if you don't mind, I'll change everything to my screen and show you a little presentation of my own before we actually get down to business and see Chris trade his own money on today's market. Once again, my name is Michael Onohov, and I'm a client relationship manager for Admiral Markets. In essence, my job is to create the best possible trading environment for all the traders who work with Admiral Markets. Here's my email, my Skype. I've also decided to add my LinkedIn account here and also my Trading Camp email. If you're interested in Trading Camp, I'll say a couple words about it at the end of my presentation. But before I do that, I wanted to speak about something a little different, about something that applies to every single one of us every day. Today I wanted to speak to you about self-improvement. And self-improvement and personal growth has been a hot topic for a number of years now, and that is very understandable. In this day and age, you must grow and develop yourself on a constant basis. You develop yourself at schools, universities, you carry on your professional careers. Just like Bridget Jones did with all the books. The concept is similar to the concept in investment, where a price of a future is always worth more than a spot price. A future must be more expensive, and you in the future must be smarter and better equipped than you are today. Otherwise, a future you has very little chance. And I hope that a present you understand that. To develop yourself, read books, attend conferences. All of you took time today to attend this webinar precisely for this reason, to develop yourself, to learn new things, and tomorrow, hopefully, after you have watched, listened, and understood this presentation, you will be a lot smarter than you are today. But I would not advise you to stop here. You have entered a new and exciting world, a world of investment, where money is made and lost, a world that is which is a battlefield for the brightest of minds of our generation. Some of you are just considering to enter this new and exciting world. Some of you have taken some steps in order to explore it. Some of you are living and breathing investment. To those of you who are still considering to invest or not, I ask you to consider the following. Once you enter the new world of investment, you will change. And you will never be the same again. You will be better. Not only does investment give you a chance to earn, because nobody can guarantee you a win, but what I can promise you though, what I can guarantee you is this. Your horizons will broaden. Forex is a demanding investment field. You will be required to follow the news, and you will be surprised how much involved in current affairs you will become in just a few weeks. technical and fundamental analysis will give you information in order to make a correct split-second decision. Your analytical skills will improve, and this is a tool that will help you not only in the financial market, but in all aspects of your everyday life. Decisiveness. Forex trading is all about decision making. A second can separate a profit from a loss, and you will learn this important skill. You will be the one calling the odds from now on, and you'll take the skill from the financial market, and you will be able to apply it to everything in your everyday life. After all, isn't life all about decisions as well? You will see for yourself. It will no longer take you about 10 minutes to order food in a restaurant. You will know what you want straight away. And this is just the beginning. But most importantly, one day you will take a loss. It will happen. It happens to everybody. And this loss will teach you the most important virtue of all, self-discipline. Believe me, money is a great motivator, one of the best motivators there is. And it will teach you that a profit is not a product of luck. It's a product of hard work and dedication. Those of you who invest regularly will agree with me. Investment is a trip worth taking. Mark my words, register a real account today and make your first trade and just see what happens. In a year, you will be able to look at yourself and you will understand. It was not just a financial affair. It was a great learning experience. Some of you will make a loss. Some of you will make it very big, like a lot of traders do. Your lecture, by the way, is a great example. But all of you, 100% of those who enter the world of investment and forex trading will be a better person. Knowledgeable, decisive, and disciplined. Guaranteed. And if I was in a position to buy a derivative on you, I would long you in a heartbeat. So register an account. Our minimum deposit in October is just $10, and consider future that you can live if you do this very important step and become a trader. And if you are overwhelmed by a task of actually becoming a trader and you want to be on a program that will allow you to develop yourself one day at a time, then I invite you to our trading camp. We have started this program this week, but we had so much interest in the program that we have decided to make it a rolling start. So we're going to have admissions open for next week also. So if you want to be a part of a trading camp, write me an email at camp@admiralmarkets.com. It is going to be a 3-day course. You're going to receive assignments from the course every day. So all you have to do to learn is just complete assignments day by day, one day at a time. You will receive strategies developed by professional traders. You will receive a great performance tracking device that you will share with your personal manager. And this performance tracking device will show you what strategy works for you the best. Also, personal coaching will be given and literature will be supplied. This is a state-of-the-art program. All you have to do to get admitted is to write me an essay about your Forex aims. It has to be very short, about 100 or 200 words, and you have to open a real account with $10 in it. You require them in your first week of trading. So thank you very much for listening. It's been Mikhail Olokhov. I will now pass the microphone back to Chris. Thank you very much for listening. Bye-bye.
Thank you so much, Mikhail. So definitely worth it to take a look at that trading camp. Very interesting to improve one's skills. So please take a look at that. In the meantime, we're going to take a look at the Forex calendar, and then we'll head over to the charts and take a look at these trade ideas. So what do we have? Well, we have some ongoing debates in the US about the budget and the deficit and stuff like that. So that is not maybe an environment that would, for example, stimulate large swings. I mean, we'll probably see some movement up and down, of course, as always, but the market could be maybe a bit more choppier than usual. Let's see. In any case, regarding the news events releases, we don't have any major today. Only some medium impact news on the Swissy in 20 minutes, and on the CAD and USD later on, and German factory orders. Alrighty. So with that said, let's move over to the charts and take a look. So I got some ideas for trades today, and specifically on pound odd, euro pound, dollar yen, and odd dollar. So let's take a quick look at our euro and pound. I'm anyhow there, but we can see on our Camarilla indicator H4 at 161.28 to H5 at 161.62. So that's possible, but we have to be careful of one thing though, of a fib we have to place from about here to here. Let's go back to the 30 now. There are a lot of lines, I know, but that's that Camarilla indicator. It just plots a lot of lines on it. So that would mean a break of the 50 up to the 618 fib. That's possible. That could make sense. Basically, right in here. So that's the Camarilla indicator on the pound dollar. Otherwise, we have an L4 at 160.50 down to 160. That could make sense as well. Alrighty. Let's quickly take a look at the euro. In this case, we have to put a fib also on the downside just in case, because those are resistance levels potentially. The fib is not really coordinating with me, so let me just take it off. Alrighty, that's better. So it's different with this dark background. Alrighty. Let's put the fib on and see where the H4 is. H4 is indicating just before the 618 fib. That would be a bit risky in my opinion. I think the 618 fib is definitely a resistance spot. Look what happened at the 50 fib, right? We stopped right at the 50. So the 618 is definitely a resistance area, and wouldn't want to go along right in front of that. That would be indicating a 3, going long 3 pips before that. That wouldn't make that much sense. But if you break above the 618, there could be that trade up to the 786. That makes sense. The L4 makes sense as well, because that would be underneath basically this trend line. If we connect the bottoms here like this, the L4 is definitely an interesting trade. So that's the Camarilla. So let's move on to the euro dollar. Quickly take a look at what's going on. Looks like we have a lot of divergence between the 4-hour tops here, for example, the daily maybe even as well, if you look at these tops in here. So there's daily 4-hour divergence, and if you look at the 1-hour chart, we can also see a 5-wave structure to the downside like that. So this is probably, because of the divergence and because of this 1-hour chart, this is probably a correction, and we could maybe, the likelihood of one more fall seems high to me. All right, if you then put a fib on this downside, you can see we stopped at the 50. We could still push up to the 618 fib and turn from there down to the minus 618 around 134.70. Now, if we don't make that push up, if there's not enough power to go to the 618 because the band, the green band, as we use it, is already downside, so there could be a potential lack of energy to the upside. In that case, if we do break this trend line and connect the bottoms like that, that short makes sense as well. So especially shorts, in my opinion, are interesting from the 618 or upon the break of that trend line down to these targets. That basically sums it up very quickly, I think. So the pivot point is a Camarilla indicator, and everyone can get that from me if they register for any Wednesday or Thursday webinar in October, by the way. So that is yours anytime you're there. Just let me know on a Wednesday or Thursday. Write an email to me, and I'll send it back to you. Already. So that's something we can keep an eye on. That's actually a good trade as well. Wasn't on my top list, but it makes sense to keep an eye on this one as well. Any questions regarding the euro dollar? Or should we move on to the next one? Now, mind you, of course, the daily chart definitely still an uptrend, but we can see clear reversal signs. So this is a reversal trade, in my opinion, because we're still above 4-hour support. You can see here 4-hour support at 135. That is the key level, in fact, the key for upside, right? Because that is where basically we get a confirmation that the upside is toast, because then we're making lower lows and lower highs. So this is, in my opinion, according to my trend definition, still an uptrend. But this is one of those cases where I think a trend reversal trade does make sense, because we have those divergences and we have a 5-wave on the lower time frame. For those of you who, by the way, I am also doing a daily wave analysis for Admiral Markets, and that's what I actually wrote in today's analysis. It has been, I have posted it, but it hasn't been published as yet. It takes always some time before it really arrives on the site, so I can show it to you already. And you can find that by going to admirals.com, go to analytics, and go to wave analysis, daily wave analysis, and or wave analysis it's called, and you'll see that I'm talking about a 5th wave ending here already, just like the pound as well. All right. So we have one question regarding the euro dollar. Are the news releases of the new dollar notes going to affect the market today in any way? Let's see. Yeah, we do have a 4-week bill auction. Is that what you're talking about, maybe? Well, the current environment is definitely different. I mean, when you have these political events going on regarding the budget, it definitely has a quietness. The volatility is decreasing. The movements are not going to. Sorry, I'm losing my voice. Excuse me. The tendency for the markets to move up, for example, the stock market to move up, is very limited if there's so much uncertainty in the market. So now the Forex will always have its movements up and down, but for example, I don't think there will be a lot of dollar strength. I can't imagine that there would be suddenly an outburst of dollar strength, although we can see technically some dollar strength maybe now with the euro going down, but there's just a quietness, a caution, I would say. But I'm not a fundamental expert, so the only thing I would be saying is that the market is just a bit trickier and more dangerous, and you might want to take less risk, stuff like that. But I'm not a fundamental expert that would incorporate that in the analysis. So more than that, I cannot help you with. So is that all clear on the euro dollar, or I'm still waiting for some confirmation, in fact, from you, or should we move on to the next currency? What do you think? Any questions? Anyone? Modris is clear. That's great. I'm happy about that. Even if you disagree, I'll gladly hear your opinion. This is my view of the chart. I know that I'm not a big trade reversal fan. But I think in this case it does make sense. All right, I guess everyone is in either sleeping or in shock that I'm trading a potential reversal. Let's move further indeed. And go to the euro pound. This is MT4, by the way. Okay. Okay, I opened the odd dollar here. So let's start with that one because that is a potential setup as well. And the odd dollar is actually more urgent than the euro pound. The euro pound is actually a long-term trade, so we have plenty of time to go through that. It's actually a swing trade. So for those of you who like swing trades, I know this is intraday trading, but this is so sweet that we need to go through that. The odd dollar. We've had corrections to the downside here. And we can see that the downside lasted pretty long after the upside correction, a very impulsive upside correction. But we did get a bounce right in here, and we're making higher highs and higher lows. Now we do have divergence between these tops, but it's only 1 hour divergence, so it's not that massively. I mean, it's important, but then again, the 1 hour divergence has already been fulfilled. Why is that so? Because the price has gone to the long-term moving average. So we know that this 1 hourly divergence has already had its effect. That divergence is not in play anymore on this chart. Unless the 4 hour would have divergence. Let's check. Doesn't look so, because the thing is that if you look at this top hasn't been broken yet. So we don't have divergence between these tops, but we do maybe have them between these. Let's check that out. Could be, although it's a toss-up. Now obviously this could be an ABC correction. Then again, if currency is showing higher highs and higher lows, we could continue up as well and expand the correction like this. There's nothing that could stop this currency from doing that. It could also be a correction like this. So it is a tricky spot right in here because it could be a turning spot or just a continuation spot. So in that regard, I wouldn't recommend a position trade here, but I do think with the trend breakout trade is possible. Unless you like reversal trades, this could be a shorting area maybe. But if we do break out, let's go back to the 1 hour chart, because the 4 hour chart you can see clearly higher highs, higher lows. And that's just a fact. That's not an opinion. That is a fact. It makes higher highs, higher lows. So let's move on to the 1 hour chart. We can see this correction like this. If we break above there, we could see the continuation to, for example, the next resistance level. We stopped at the 618 fib of this down fib. We could stop at the 786 next time. That is 94.74. Not much space, but if we then zoom into the 50-minute world, and we take a break of this high, it will be 94.50. That's 24 pips. The stop loss is at 25. No, it's a 1-to-1 trade. I will skip it. I don't like 1-to-1s. I want 1.5 to 1, personally. You can see here a break of this is this box. The stop loss is about like this. So it is a with the trend breakout, and those are my specialities. But the space here is just too small, unfortunately. But you can see here a typical example what I would be looking for. The entry would be above this 15-minute fractal the stop loss below this 50-minute fractal, and the target would be the next, will be a 2-to-1 in fact. But the 2-to-1 has to hit before the next major resistance. And I consider the 786 a major resistance. What are major resistances? Daily and weekly tops and bottoms, daily and weekly trend lines, any 4-hour divergence, or any basically daily fib, like this. So this is a case where we have an uptrend, we have an impulse to the upside, we have a correction, check, everything's good to go, but I don't like the reward to risk. So let's move on. If you do like it, then you could try it. I guess for me it's too small. It doesn't make sense for me to, I would rather have more R2R. Let's move on to, let's see. Or before I move on, just a quick answering of 2 questions, okay? The MA are 34 EMAs and 144. And the band is 34 EMA close, 34 EMA high and low. That's this 3-wave band. And the AO settings is just the typical, I didn't change anything. It's just the usual one. Alrighty. Alrighty, let's actually I'm looking at the list and the rest are more long-term position trades. I thought I don't have anything regarding the short-term at the moment. We can take a look at that later on. I'll just show you, well, the euro pound could still be relatively swing trades. So let's start with that one. Let me just change the template so we see the actual candlesticks. Okay. I'm going to start from the very, very top, okay? So you have an idea what the idea is. This could be a wave 1, 2, wave 3, this is potential wave 4, and we have a wave 5 left. You can see how strong this move up was. That's typical for wave 3. So a break of this top, or at least a double top, is very likely at one point or another. That's all the way at 98. So right now we made this huge correction for a few years. So let's zoom into that. And you can see that that correction is kind of like either a downtrend or it's a bull flag, right? It's probably a bull flag, but we know it's a bull flag when we break above this line. And here you see that huge up move. So if we put a fib on that huge up move, where did the currency stop? Well, right at the 618 after it paused at the 50 and 382. So the 618 could definitely be a bouncing spot for the upside. And we've also seen a very impulsive move up so far, which could be a wave 1, 2, and now we could be making a start of the wave 3 of 5, which is the very juiciest part of trading. Daily chart. We can see that this upside had 5 waves as well, and that this is most likely an ABC correction. If we put a fib on that side, on that move, We just didn't make the 50, in fact, which is a pity. We missed it by some 50 pips. Let's put a fib on this side, on this A wave, because this is probably an A, this is a B, right, and this is a C. So we're about, yeah, we just missed that target, which is a pity. Alrighty. In any case, it does definitely look like a typical ABC correction with a 5-wave A, a choppy B, and then a 5-wave for C. So that's the daily chart. Then if we look at the 4-hour chart, we can see that that wave C was in a very nice downtrend channel, which we could have broken out of. But we have to be aware of one thing, though, is this potential resistance line as well, if we connect these stops. But we did break above this resistance as well. So the likelihood, yes, an ABC correction is a 3-wave correction, indeed. And this is that last correction, of which had five moves here. You can see very, very clear. So we broke out of this downtrend channel, most likely. Price is above our long-term moving averages as well. But we still should put this green line on just in case. If we then move on to the 1-hour chart, you can see the upside was very impulsive and had a 5-wave structure, which means that that is probably wave 1 of a wave 3 of a wave 3 of the wave 5. Anyhow, it's the very first moment where we saw the impulse starting. So the whole trade idea is to wait for the next ABC correction to materialize down to the 50, 618, or 786. We don't know which one at the moment, but we can put a fib on this downside. And let's see where the ABC correction could end. This is the first ABC, maybe the minus 618 target. So an entry order at 84 with a stop loss below 83.30, around 83.27 or 83.25. That's a 75 pip stop loss, but the target is going to be 98, which is 1,500 pips. So it is a 20-to-1 reward to risk. That's the idea. I'm not going to punch in the trade myself right now with you. So I think everyone must be interested in a trade like that, even intraday traders. Why not? Even just take a small position, even if it's, even if it's whatever small percent you want to try it, or even if you're not a fan of swing trades, you can practice one if you want. It does have a good reward to risk. So, will we hit the 98? That's going to take some time, logically. It sounds very interesting, but it will take time. But although the wave 3 should happen fast, relatively. If you want to aim for something lower, then aim for example, the minus 1618 at around 87. That will take substantially less time for the trade to materialize. It would still be 300 pips versus 75. It would still be a 4-to-1 trade, right? But the time factor would be a lot less. So it depends on your ambitions. If you want to get out faster, then aim for that 4-to-1 at 87. But the likelihood, because of this impulsive move up, the likelihood of this being a correction and at least one more move up is very high. So 87 is a decent chance. 98, of course, is very high. So that's something that we're not sure of, less sure of getting there. If you aim for 87, you're still aiming in front of this weekly top and in front of this weekly resistance line. So you'll catch the profit before you reach that resistance. If you're aiming for 98, you're going to have to live through a lot more pullbacks before you get there, right? That's why it's going to take longer. So that sums it up. Anyhow, I'm elaborating again a bit too much, but if you have any questions, let me know. Otherwise, I'm just going to punch it in quickly. Let's see, the stop loss is about 2 pips here. I'll just go a bit above the 50 fib at around 84.05. Just 5 pips above the 84 and go at 83.25. So it's 80 pip stop loss. And I'll do one on the 87 target as well. Maybe go to 86.90, not 86.90. I don't like to go exactly to the pip. Yeah, this is a small account. Alrighty. Any questions regarding the trade? Idea? Otherwise, we can move on to the pound odd. Pound odd looks like a very good reversal signals. Could be massive downside, I think. Armando, what part do you want to see again? Otherwise I can euro pound. I'll type in the numbers otherwise. So I just typed it in there so everyone can see it. That's just what I have at least. Basically aiming for the 50 fib. Now, of course, it could also go to the 618, right? But I mean, we're talking about 10 pips lower, so. It could also go to the 786. A wave 2 can be very deep, right? So if you don't take this trade and you eventually a little bit later on you see a 780, the price is at the 786, then you might want to try it. Put the stop loss here though. It would be even a better reward to risk. And I might add on some more trades as well. You see, I'm one of the reasons why I'm taking just a small position is because it's just one of the entries. You could definitely take more entries at the fibs, different fibs, which I might be doing, depending on how price develops. And on different methods. You could wait for a confirmation at the fibs. You can wait for confirmation and bounce and hook and take it in here, or take it on the bounce and confirmation here. So, you know, there's many ways of catching and adding on and scaling in. So, you know, this is just one method of entering that trade as well, mind you. If you see what I mean. You could wait for price action to confirm the 50 bounce, 618 or 786 bounce. You can wait for price on the lower time frame on the 1 hour chart to make a higher high, higher low, and then take the next break of that higher high, or wait for a trend line break, or wait for this green line to break and hook back and continue. So you can, one trade idea like this, you could tackle with different entry methodologies. Multidus, for example, prefers to wait what price will happen at that level, right? That's also fine. What I have done is just take a small position here as a scout, basically, just to test the waters. I wouldn't do it if I didn't like the trade. I do like the trade, but I don't want to risk too much on this because I want to remain flexible with placing risk at different levels and upon various confirmations. So sorry for elaborating there a bit. I thank you for your patience, though. Just one more thing on the £0, because I got a question how long the trade will take. And I think that the wave 2 could take some time to develop. But once we get a wave 3 here, if it is a wave 3, this will happen pretty fast. So it's difficult to tell exactly. Let's say that could take a week here, maybe a few days here to move down. So the shorter 87, I think, should be completed by probably end next week at the moment. Roughly, it's difficult to tell. I have too many fibs. 1 second. Yeah, roughly end next week, maybe the week after. The long-term target, well, that's something that's going to take a lot longer. Let me go to the monthly chart. That really could take, that's why I said you want to be careful with that time factor, because that really could take, let's see. Or you're talking, that could take 4 to 6 weeks. So that's more of a position trade, in fact. This is a swing trade because this is more position trade. So it is definitely long term. That the 98 for sure. I mean, that isn't going to happen fast. If you don't want to hang on that long, go for the 87, because then you can still close. It could still be within a week or two. Okay. Let's see. Well, there's a question why we wouldn't sell it to the 50 fib. And that has everything to do with reward to risk expectations. First of all, if I buy it here, the reward potential is a lot bigger. If I sell it right in here, my potential is limited, first of all, and the risk is even bigger. That's not good. Plus, the 3D2 could, in theory, be a bouncing spot. So that means that we sell it, we see it bounce up here, and then move down to the 50. It's going to be choppier, because it's counter trend, and the reward to risk is not as near as great. It's very bad, in fact, poor. Plus, it takes a lot of time to develop. Wave 2 could be, yeah, those are the main reasons, basically. If there was any short in here that could be interested, is maybe if it pops up here, bounces. If you see some bounces or hesitation here, and price doesn't break through that trend line for 5 hours, then a short in here down to the 50 fib could make sense. Oh, yeah. Then there's a decent reward to risk and a decent chance of that succeeding. Right here, we're in the middle of nowhere. Does that make sense to you? Do you see my point? So that's why it's not that interesting for me. I wouldn't want to have a limit order here either to sell, because price might break through. If price were to go up and stall and doesn't break the high for 5 hours, well, then there could be a potential for that indeed. That's true. But I would want to see it happen. Let me see this way. Okay, cool. Let's see. Zico sold the euro pound. That's a good question. I don't know. Commenting that trade is difficult for me because I don't know what time frame you used it, what methods you used it. I would rather advise you to stick to your trading plan, because that is the best in general. I mean, I don't know where your stop loss is. There's too many factors for me to help you there. Unless you send me a screenshot or something like that, that could be of more assistance. Unfortunately, that's the problem. I don't know exactly the parameters, but in general, it could still make that downside to the 50 fib. So depends on your, how much you like to trade. Depends also where your stop loss is. If your stop loss is above here, then or here, then any upside could still encounter that resistance for downside and it should be still okay. Or if you don't want to give that much space, you can put your stop loss here. I mean, the chances are high you get stopped out, but if it's, you would not be exposed to this retracement. And indeed, anyone who wants to trade a breakout could trade the break of this green line on the 4-hour chart, put entry here, put the stop loss at the moment here, and that would be the breakout trade. But if the price will probably move lower and do something like this, so then the breakout trade will probably happen around here in the future, somewhere there. That would be the swing breakout trade. That would be something that I would consider as a scale-in for myself when that happens. At the moment, we have that set up too, but it's just I don't even have the order here pending because it's just the likelihood, I think, is so low that it doesn't make sense, I think, at the moment. So let's move on to the pound odd. And I'll show you why I think this is a reversal setup. Let me take everything off so we can see it a bit from a cleaner perspective. In the meantime, I'm also going to answer one more question here that Lachazar noticed that in the wave analysis that's posted on Admiral Markets, I use time zones. And those are indeed Fibonacci time zones. That's true. But I also use candlesticks. I'm going to show you right now an example of other time method that I'm going to use so that I have an idea that the reversal is coming up on the pound odd, in my opinion. And this is a typical example. We had a huge downside, but what happened here? We had 3.5 years of downside with 12,000 pip downside here. That was a huge down move. We went 1.5 years sideways and then had a 3,000 pip up move since April. That was very good trading. I love this trading because it's exactly what I like. It's breakouts with the trends on 1-hour charts. So that was a dream for me, as you can imagine. Perfect for my trading. What has happened now, though, is if we zoom into the weekly chart, and this is an example of time factor, we had 1, 2, 3, 4, 5, 6 weekly candles that couldn't break this top. Now we're getting interested in a reversal because all this upside every week, almost every week, had a higher high. Look at it. Almost every week. Where were the exceptions? Here, we have the green boxes. Here, here, here. 4 exceptions ever since March. Now we haven't broken that top for 1, 2, 3, 4, 5, 6 candles, and only this candle basically had a higher high. So compare that piece to this, and you'll see that you can see the difference, right? If you look at breaking of tops and not of candle highs, then only here is a fractal. That one got broken within the 4th candle broke the fractal, whereas the 6th didn't. Moreover, the 6th candle was very bearish. So if the 6th candle would have a lot of momentum and would be really like pushing up a lot, then I would say be careful. Yes, we didn't have a break 6 weeks in a row, but probably push this week right now. But we can see that bearish momentum going into the market. So this definitely looks like a reversal setup, and that is not so strange, is it? So what we have to look at is the fact that this downside got a correction, and now the upside, this upside, eventually is going to stall and they're going to make a correction, right? Nothing moves in one shot, as we know. Everything moves in cycles from level to level, you know, from chart pattern to chart pattern, from trend line to trend line, from fib to fib. Whatever tool you use is really irrelevant. It's bouncing from one support and resistance to another, right? Everyone can agree with that. However you want to interpret that is up to us, but individually. But anyhow, so this upside is going to get corrected eventually, and it looks like it's going to happen now. And if we put a fib on this downside, where did the currency stop? Right at the 236 fib. If we then move to the weekly chart, and put a fib on this upside, this downside could last to the 382, the 50, the 618, most likely. Potentially 786 or 886, or even be a downtrend, although a bounce at these fibs is anyhow likely. So these are potential support areas, very strong support areas. So we basically have space down to 163 before we should encounter heavy support. Although we should be aware of the weekly fractal still at 168.80. So between 168.80 and 163 here is really perfect bearish territory. Once we bounce off the 382, there's a high probability of one more downside down to the 50 fib. And there we'll have to see, do we get a upside continuation, or one more down move to the 618, and there we have that upside continuation. That upside, by the way, is also very interesting. Once we do get a bounce off the 50 or 618, an upside up to the minus 618, and the next monthly fib at 382 is very high. And that's at 192.50, 194. So we could see, and that's even a bigger trade, all the way from 160 up to 192. That's 3,000 pip trade again. And we would have this three wave would be finished. So that would be the next big trade. This is a big trade, right? But the other one, the upside is even bigger, right? And this downside could most likely happen like this, in three waves, two, and an upside. So something like that is the path of least resistance. And what does that path of least resistance mean? The path of least resistance is nothing more, nothing less than the most likely scenario where price is bouncing off one support and off next resistance and eventually breaking out. Alrighty. So let's move on to a bit more specifics. Now we've concluded that. Let's take a look at the day chart. And I'll take everything off again. This is just to get the framework for the direction. Let's just go to the day chart. We can see a potential, this is potential, I think it's a crab, 886 fib. We talked about it last week already on the pound odd, in fact, but I didn't give the bigger, well, the long term, this wasn't confirmed yet, but there was potential. Now we got it confirmed, and we had a tremendous downside here and a break out of that upside. If you put a trend line like this, we broke out of that. So we had a very deep retracement, which is typical for the pound, 886. And an initial move down to the minus 618 is very likely. Let's go to the 4-hour chart now. We're probably continuing now down to the minus 272. When we finish that, we might see an ABC correction, a three-wave correction, and then continue this downside. So it all depends what time frame you want to, how you want to enter and approach this reversal. If you want to use a longer-term chart and aim for, what was the target again? The 382 is at all right, let me put a green line there at the target. That's the main target, the green line. Okay, so it depends. One way of doing it is if you want to take a precision trade. Let's see. Probably the best for position trade is to let this bottom break, wait for a hook back, and have an entry at 56.18 for that downside there. That would probably be the best position trade at the moment. For intraday traders, though, we might have a trade right now. What we have left is basically of the first wave, of these first 5 moves down, we have maybe a continuation right in here left today. So for a swing position trader or swing or position trader, I would wait. But for it, a intraday trade, maybe we can have something right now. Let's take a look at this 1-hour chart. We can see that the retracement has been made to the 0 line here on the 1-hour chart. And we're making lower lows, lower highs. So that looks like we got a turnaround already here. Definitely downtrend on the band, right? Anything else that's worth mentioning? Definitely bearish price action. If you look at the 4-hour chart, look at all these wicks here. Massive 4-hour rejection and then continuation. The 4-hour chart, in fact, broke the support, the 4-hour support here. A break of this bottom is very likely. Let's move on to the 30. Kind of like a triangle here, isn't it? Broke out of that triangle, hooked back, and continued. Let's see. That was a pretty good breakout trade already, although it hasn't gone that far. I'm trying to see, basically what I'm trying to judge now, I'm thinking in myself, is the entry methodology. You see, we already had a breakout pullback continue here. So that trade is behind us. If you look at the 1-hour chart from closer, we already had a retrace of this 1-hour candle. What I'll probably be looking for is what would make more sense than to trade it right in here. It's because its currency already moved down a few hours. There's a likelihood of some retrace. That makes more sense. So maybe if we fib this 1-hour downside here, and for example, an entry order at the 50 fib with a target, let's see, let's be conservative and just in case take this fib and aiming for this minus 272 would maybe be the best idea. Sorry, I'm just adding one target. Alrighty. Now we don't know if we get a bounce here or not, right? But it doesn't make sense. I don't think it makes sense to sell right in here while we could have a continuation up. There's no entry methodology that would allow that for me, myself, at the moment, to enter right here, right now. But if we get a bit of a retrace up to around the 50, as I said, 170.45, 170.50, with a stop loss above 170 at 170.90, that would be around 45 pips, and the target is 168.90, which is approximately 150. So that would be roughly a 3.5 to 1, I guess. But this is also just a trade idea that is catching, don't forget, just the last part of that downside. Oh. Just the last part of that downside. After which we should expect some correction, and any rejection in here could see a very nice downside to 163, I think we said, right? Alrighty. That's the pound dollar. Last but not least, the dollar yen. Very short. Basically what it boils down to is a potential fourth wave finishing, right, because we already had a very massive upside here. This is a triangle, and we've been correcting here for pretty long. Actually, this is 1, 2, 3, 4. This is the 5th month after we've topped out here. So what I'm thinking is that we still move up this month or next month to break this top. If it doesn't happen this or next month, then maybe we're going to correct even longer. If it does happen this or next month, then we could see maybe this correction continue, this trend continue. And if we then zoom into the day chart, what we see here is a potential A, B, C, D, E for upside sometime this month or next month. Key level in this case is definitely the 95.80 bottom here. If that gets broken, then probably this is a three-wave correction like this. And the 90 to 91 areas is the target for downside after 95.80 gets broken. So this is a potential wave E. It could happen at any moment, basically. So I'm keeping an eye on this. Let's zoom in. If you then zoom into the 4-hour chart, well, let me get rid of everything here. Then you can see that this last leg is doing something like this. And this part especially is moving very choppy, right? It's pretty corrective in nature. We stopped at the 272, so maybe we can still make it to the 618 target, but it's moving so slow to the downside. This last part, if maybe it's looking like and actually, if we probably zoom to the 1-hour chart, you could even see it better. It's kind of looking like a falling wedge like this within this downside. See that? So that's potential. In my opinion, there's still one thing that definitely still is important is some resistance in here, let's say. Let's take a look at the daily chart one more time. All right. So basically, oh, sorry, I just deleted it. 1 second. These are key resistances of the day chart, and this is of the 4-hour chart. It looks like we are pushing through that rising wedge as we speak, in fact. If we post a high above 97.50 and then make a correction, I would be looking to long it in here. Looks like we're breaking now, but I'm still a bit cautious if we are below 97.50. The reason is that we still have a long-term moving average right in here and this top that can be resistance. So I'm still a bit neutral in here. Bullish above 97.50, slightly bearish below 96.60, but really with a limited target of 96 at very max. And I wouldn't really be that interested in that downside because I see potential support, big support at 95.80 or anything above 95.80. So that's that dollar yen. A lot of waves are in 3 waves indeed, more than this, but there are exceptions. Or not exception, it's called an impulse wave. When you have a with the trend move, those move in 5 waves and not in 3, while a correction is in 3. And this is the basic wave structure of the market. And doing wave analysis is not easy because it does require a lot of practice, and it's difficult to implement in with future importance. It's easier to look in the past. That's why many people don't use it. But I think once you get the hang of it a bit, it definitely becomes a useful tool. I think the only thing is that it's just one of the things that you can use. You still have to use your trend lines, your moving averages, your fibs, whatever you use to confirm that analysis. That's I think the most important. So that's the dollar yen idea. Alrighty, well that wraps up what I wanted to show you. Let's take a look at the euro dollar. What happened with the euro? Oh, sorry about that. I can't find the ideal. There it is. Maybe this one. Well, let's go to the 30 otherwise. So yeah, we're getting a bit of a bounce still. Couldn't break it. Let's see. These are 30-minute, 15-minute bars. So we started our session. Oh, again, I canceled it. Sorry. It's because I want to open my drawing tool and then I pressed the wrong button. Yeah, it found some support indeed. Well, there's your right here. Small bounce so far. So let's see. I mean, it has that potential to expand the correction into something like this. It definitely could. Up to 136, which will probably be a resistance level. It could do that. I'm not interested in that upside because it's too doubtful to trade it to the upside. I don't think the stats are not that great. Sorry, folks. Am I back? Yeah. Okay. Sorry about that. I must have hit with my elbow a mute button that's hanging on the headset. It's not. It's external next to my arm. That's why. Alrighty. The 382 got the bounce I was saying, and looks like we could make that continuation to the downside. So maybe that could be a trade set up on the pound right now. Let's take a look. Looks like the downside is in motion, in fact. I don't think it's going to be easy for buyers to push this up to the 50 fib. I think that this could be, there's a pretty sturdy chance that this is the reversal at the 382 for downside and the break of this bottom. Let's go back to our Camarilla just quickly. Oh, sorry, Kaylin. I missed your question there. I recognize it now. Okay, I'll take a look at. It's a bit lengthy, but no problem. I'll just quickly take a look. I'll take a look at your question. Just want to take a look where the pound is having its L4. 160.48. Okay. Let's see. We're breaking the bottom. That's good. We should probably see some bounce in here. You know, the pound, it likes to bounce when it breaks a bottom, so no rush. What I probably would like to see is some type of 5-minute formation like that, and then the next break. It would be perfect if it moved up very close to the L4, gave a small pause, and then maybe a small 5-minute bear flag, and then break. Yeah, that would be probably the best. Alrighty, so we can wait for that. Other than that, don't forget that tomorrow, just go to Education Webinars and click on Sign Up at Moving Averages. And trend line. So we'll be looking at breakouts. We'll be looking at my favorite trade setups, in fact. Hopefully we'll have some nice ones. We'll be specifically focusing on breakouts. So we'll be scanning a lot of currencies and looking for that. All right. Let's see. Otherwise, tomorrow we have price action and supply and demand trading. And here you see all those webinars as well. All right. Alrighty. Then I'm going to answer two questions here. I guess we're maybe still have some time after that to look at something, but if it's really worth trading USD pairs, yeah, that's a good question. Could be maybe better to trade something else like the pound odd or euro pound indeed. But it's still I still keep an eye on it, and yeah, it's a good question. I don't know. It's definitely of course annoying with the politics. Yeah, we can take a look at euro yen, no problem. We can do that right after these questions. First, I'm going to answer Kaden's question. How would you determine the breakout is the question. I know one way you use is a wait for a retest of a trend line and 50-minute fractal. And break of those you enter. That's true, indeed. I'm waiting for basically a confluence of a 1-hour trend line and a 50-minute fractal. Sometimes a 5-minute fractal. If the currency has just begun to move up to the trend line and it has only moved like 30 or less pips, then I could use the 5-minute fractal as well. And the question is, how many retests are valid? And how much time do you give the trade to enter and exit? Let's see, retests. I'm trying to think what you mean with retests are valid. Well, basically, I think what you mean is that if you have a trend line, let me go to the other charts. In that regard, okay. Which time frame are you thinking about, Kalen? The 50-minute, okay. I really don't have any rules for that particular thing. So what Kalen means, let me give you a practical example of the odd so that you understand, because it's a good question. It could be good to for you to gain an insight of that as well. Is that basically if you have a good 1-hour trend line, let's say we like this 1-hour trend line. Okay, it's not the best in the world, but just as an example, it's still good enough for me, at least to show it to you and for me to consider taking it, right? On the 50-minute world, it looks a bit maybe funny with some price action, but on the 1-hour chart, you will see it only has a wick above it and it nicely connects the top, right? So that's a good trend line. What Kalen is asking is basically how many times, if a 15-minute world price is bouncing against that trend line, how many retests do you want before you might consider something to delete it or not take it? In this case, I don't have any rules for that. So what I would give as advice is that if you have, for example, many 50-minute hits like this, you always need to take the stop loss, put the stop loss under the most recent 50-minute fractal. So if the low gets broken in the upside, in this upside example, we need to readjust the stop loss. That's the most very important. And I usually keep the entry above the highest 15-minute fractal if there's a group of them. And the reason for that is because if I would adjust to the new 50-minute fractal, then there is a chance that we break and still move down as a respect for the higher one. So I usually keep the entry, though, I keep it at the same spot. Otherwise, I don't have a maximum retest on the 50-minute chart that I would not like to trade anymore. Regarding the time factor, so there's no real time factor there. In fact, often enough, when it does something like this, you see the 50-minute AO go back to the zero line, which actually helps the continuation. There is a time factor, though, when entering the trade in expecting continuation. When you see continuation, the trade should materialize within 5 to 6 hours. If it doesn't, then there's something else going on, and the likelihood of a retrace and taking out our stop is becoming higher and higher. All right, that would be the max. We preferably want to see that trade on the 50-minute chart, this breakout, materialize within within a couple of hours. But 5 to 6 would be typically the max. Otherwise, what we usually see, if it takes longer than 5 to 6, you would then typically see a breakout, and what you just see is a bigger bull flag or correction, and it could still be another breakout, but in fact the first breakout is finished. So you're actually holding through a retracement and hoping for a second breakout. Okay, then is asking if it's a slanting trend line and you have a fractal above trend line. It depends. If there's a trend line like this, these are good questions, and you have 3 touches, for example, and you have a 4th touch maybe that sticks a bit through like this. It depends. If we can move the trend line to incorporate that touch, I would be happy to do that and would gladly take the next breakout as well. If it's a bit too much and the trend line just doesn't make sense and is either, doesn't have the touches, the connections, or the angle, or whatever, it doesn't make sense, well then, what can you do? Maybe on the lower time frame, there's still a trend line possible that could incorporate that new touch. Or if the touch is only sticking through with the wick, I gladly leave the trend line as it is. If there's a full candle above it, then I want to change that trend line to incorporate the new information. So then we can take the next break. If that doesn't work, then maybe on a lower time frame. If that doesn't work, then I guess there's always the next currency, basically. So these are my rules for the breakout trading. And as you know, it's my absolute favorite. If it's just one candle, it depends on how the candle looks like. If it's a very bullish candle above the trend line and it has a full body above it, I wouldn't use this trend line anymore, right? That trend line has been broken. If it's, if the candle is something like this and the trend line is let me do that again. The trend line is like this and the candle is maybe something like this. Well, I wouldn't mind leaving it a trend line like that or just moving it up slightly if after that we got to retrace, right? Alrighty. We could quickly take a euro yen. I guess then we will wrap it up for today. The euro yen could be in a very interesting. Actually, this is something we can discuss tomorrow. Maybe running out of time here to go in full detail, but the euro yen too could be an interesting spot. Let's see. Let me go to which time frame? Maybe day chart. What do we got here? What this is going? You're going? Okay. Well, very quick then. We'll keep it for tomorrow. We got divergence on the daily chart. We broke this top, got divergence, and potentially finished the 5th wave. This was very choppy, 5th wave, and what we could see maybe is a correction all the way down to this support level. Right? That would be a pretty big correction to 120. Let's see if that happens. It's, again, a reversal trade setup because of the daily divergence we have here. And we'll have to see if that downside indeed materializes. The confirmation, I think, we got already in a way that we pushed through this daily fractal, which in my opinion increases the likelihood of at least going down to this level here on the daily chart. So some downside continuations is likely. And the question is only from where. We got to pop up here. Maybe if we fib this last down move, for example, any of this area right around here, 56.18 could be the bouncing spot for more downside. That's the quick version, basically. All right? We can look at it more intensely tomorrow. I thank everyone for being here. I hope you liked it, and tomorrow we'll be talking about breakout strategy specifically. So we'll be looking at my favorite setups, strategy, and then Thursday we'll take a look at supply and demand and price action. So that's, we have specific characteristics. This is kind of was more like, it turned out into more of an Elliott wave and Fibonacci session. It was not intended, but just because of the structure of the market, I liked some setups there. And but tomorrow we will focus specifically on on these setups, and I'll try to limit the bouncing around different ideas, but and try to focus on those breakouts. We will be looking, because we're specifically looking at one strategy, we will be looking at a lot of currency pairs though. Alrighty, so I hope to see you then, and I wish you good trading in the meantime. Cheers.